Hi there. My name is Victor Alui, and I'm the head of investments at Sankore Global Investments. This is your weekly financial markets wrap. We start off in the U.S. markets, where stocks slid on Friday as they notched their second straight week of losses. As the tech sector was under some pressure, while basically inflation concerns remained front and center, particularly as the Fed meets this week. The S&P lost 0.65% on Friday. The Dow was down 0.49%, while the last Nasdaq lost 0.96%. For the week, the S&P was down 0.13%. The Dow was essentially flat as it lost just 2 basis points, while the Nasdaq shed 0.7%. Tech shares were broadly lower. Apple, Microsoft, Amazon, Google, and we even saw some profit taken on Nvidia as well. And this weighed really, on the broad market. Investor sentiment basically continues to focus on inflation, with PPE prices coming in much hotter than estimated. It came in at 0.6% for the month of February. This was double, the expectation, and the hottest that we've seen since September of 2023. And this number basically ended up pushing the 10-year Treasury yield 22 basis points higher for the week. Again, like I said earlier, the Fed commences its meeting tomorrow. That meeting will end on Wednesday. All eyes really are on that meeting to get a sense of guidance from the Fed, particularly around how it's thinking about this sticky inflation situation and what revisions it might make to its dot plot and also its estimates. It's important to point out here that Fed funds futures basically point to the fact that the rate is likely to remain unchanged. In fact, 99% unchanged at the meeting in March. However, the likelihood of a cut in June has now reduced to about 55%. So clearly, this inflation situation is beginning to create some concerns and some worry. So the meeting that the Fed will have this week would really prove very crucial in providing, direction, particularly on that interest rate front, for market participants. Over in China, earlier today, a series of economic data was put out by China for January, particularly retail sales and retail sales rose about 5.5% year on year. Industrial production was 7%. Nevertheless, real estate investments still dropped about 9%, while manufacturing activity was up 9.4%. So the governor of the central bank had hinted last week that there was even more room for the Central Bank of China to cut interest rates. Really remains to be seen what they would do on that front, and also particularly on the real estate front, which remains lackluster really at the end of the day. So really remains to be seen what they do on that front to really try and power growth for the Chinese economy this year. Over here in the local economy, particularly in the fixed income market, the market opened on a calm note, last week, particularly in anticipation of the PMA auction, midweek. The tone was really largely bearish, however, before then, because, of the tight liquidity situation. Banks were essentially selling some of their bills to try and raise, liquidity. We, however, saw some improvements in the markets, particularly after, the was lower, 100 basis. It closed at 16. 364-day paper was lower by 36 basis points. It closed at 21.12%. In all, Treasury bill yields were lower by about 11 basis points across curve. It was pretty much the same, situation in the bond markets. The market had essentially expected the auction circular, which was released. That kind of created some bearish tone, in the markets. But generally in the secondary market, bond yields were 31 basis points higher across the curve. Now, going to the auction that's happening today, the DMO put out that circular last week. It will be raising about 450 billion across 3 maturities. There'll be a new 3-year, and the 7 and the 10-year would be reopened. Our expectation is that stock rates will basically hover around where the secondary market is. However, if you look at the inflation number that we saw last week at 31.7%, again, just highlighting the fact that inflation remains really, really hot, the expectation is that the MPC is likely to stay very, very hawkish, to tighten even further, to try and rein in this inflation that seems to be threatening to basically run away. We think that this inflation number and the outcome of the bond auction today will really provide direction, at least near-term direction, for the fixed income market. While going into next week, the outcome of that MPC meeting and also the PME auction that is happening next week will serve to provide that medium-term direction, if you will, for the market really. So a lot of stuff to look out for this week, both on the global front and also the local front. We continue to keep an eye on it, and certainly we'll keep you abreast and informed. Thank you very much for your time. We do hope that you have a very productive week. Thank you.